Welcome back. This is Chili Davis, and I'm back to another video. I want to welcome back all my subscribers and welcome to my new viewers. If you're new, please click the subscribe button and click the notification to get my frequent updates. This is the channel where we talk about my top stocks. Please like, subscribe, and share. Please share the videos. I'm trying to grow the channel to 1,000 subscribers. I have 306 subscribers. So please like, share with your family. Okay, so today we're going to talk about the stock market. In my portfolio, we were up almost 1%, 0.96%. So it was pretty much a flat day. As you see, during the day, we struggled to make an increase, and then it just fell back down. Okay, so we're on the eve of Jerome Powell coming out and speaking. Jerome Powell will come and speak tomorrow, the Federal Reserve, and he will talk about raising interest rates 50 basis points. Now, the problem is the market is saying they need 100 basis points. Some people are saying 75, but basically we need double to kick inflation out. Right now, inflation is reportedly at 8.6, and we need it to be 8.1 or 7.9. So that's a big problem. Inflation is running rampant. We saw the report this last Friday, and that caused the market to start selling off. Now, which stocks will be impacted most? The Nasdaq stocks will be impacted most. Nasdaq stocks include Tesla, Apple, Amazon, ChargePoint. All those technology stocks will be hit by the Nasdaq, and if the interest rates go up, okay? Now, your Dow stocks, that's like your McDonald's, your Coca-Cola, they will still be affected, but not as much, okay? So it's basically, your technology, Twilio, Uber, will all that are sensitive to higher interest rates, which takes away the money, okay? Because right now, it's very expensive for a corporation to borrow money, okay? As you can see, we have Coinbase layoffs, and the Fed faster interest rate hike, okay? So that is what's holding the market hostage. Is going ahead, and like I said, Fed policies are entertaining a 75 basis point rate increase, even though they wanted to give us a 50 basis point interest rate. That means, like, if you go buy a house right now, after this month, last month you would have paid 5%. Next month you're going to pay 6%, and that's with a good credit score. So if you got bad credit at this time, if you go out and take a home out, you're going to be talking about paying 8-9% loan. Those rates haven't been heard since the 80s, okay? Those high interest rates. But this is what the Fed has to do to tamp down high inflation. The cost of goods like travel, food, gas are all up, and they will only come down if he hires the interest rates, okay? So it says here the bond yields point to a possibility of more aggressive Fed as yield on the 10-year treasury shot up to 3.37%. And this is what people have to understand. The Fed has to balance all this stuff, whether or not to do what they call Q tightening. So they were buying up debt. Now they're going to be releasing debt back on the balance sheet, okay? So they're going to be selling their debt. That means they might have to be selling it faster, right? So again, this is a really tough time in the market. They're trying to raise interest rates to cool down the spending. We have a spending economy, and so they're trying to raise interest rates, and that will slow down people from buying big ticket items such as houses, cars, and other goods and services that are tied to a loan. All right. So again, 75 basis point rate hike increase. That is what Wall Street is looking for. They're hoping to get that, to get this inflation to come down. Now we won't know the numbers to inflation to the 10th of July. Okay. So again, all this stuff is going to be on pause. Whatever the Fed does, it's going to hurt the stock market immediately. but again, that won't happen to 2 o'clock tomorrow. So again, just understand that tomorrow the stocks may take a hit. Now, which stock part of the stock market will take a hit the most, again, is Nasdaq. Nasdaq Composite. These are the stocks like Apple, Google, Tesla, all these stocks that use cheap money to grow their business. They will be hurt tomorrow. As we see over the last 6 months, Nasdaq stocks have been down over 30%, while Dow stocks over the last 6 months have only been down 15%. Okay, so that goes back to these indexes here, where you have the Dow, the Nasdaq, and then you have the top 500 companies. But between the Nasdaq has been down 30% over the last 6 months, while the Dow has only been down 15%. Okay, so that's the big differences in the stock types. You have your traditional Coca-Cola, McDonald's, some of your oil, Dow, Coca-Cola, Procter & Gamble, all of them live here, and they're only down but so much. While the Nasdaq stocks, some of them down are 50%. Okay, if you think about Twilio is down tremendously because again, when you talk about future revenue, right now people are looking to be in safety. Also, if you want to be real safe, you can just buy bonds. They earn you 3% a year, but then with inflation running at 8% a year and you're getting bonds paying you at 3%, you're still at a negative loss at 5%. Okay, so you have to balance it out. You've got to still be in, if you're going to be a long-term investor, you have to understand that some of these Nasdaq stocks will double in the next 5 to 10 years. You need a 5-year window for these Nasdaq stocks. The Dow stocks, you could kind of see them a little better in a 2-year window, but the Nasdaq stocks are more of a 3 to 5 year window. Okay, and you'll see your returns definitely over a 10-year period, whether it's a Dow or it's a Nasdaq. Either way, you win in the long-term investing in stocks. Okay, so real quickly, let's go over the top stocks. Again, it was a pretty flat day either way. We did have CrowdStrike up 4.51%. We had Upstart Holdings up 3.54%. Now, again, Upstart Holdings is a fintech. They will definitely be hit upon interest rates rising tomorrow. All right, so we'll see how bad it is. But in general, even if the market rises tomorrow, expect a lot of these like the fintech, Upstart, Square to drop down significantly tomorrow. What else? NVIDIA was up 2.45%. And ChargePoint was up 5.55%. Again, ChargePoint is another technology stock. As we saw earlier in the week, it was hit. It came into the week, and on Monday, it crashed. Okay, we saw that Monday, it crashed. Okay, now again, ChargePoint is a more long-term play. Only 1% of the U.S. driving market has a Tesla or some other form of EV vehicle. Okay, so ChargePoint is a 5-year play. Again, I'm still buying into it. I own about 15 shares in ChargePoint, and I'm still adding my position. But again, this is a 3 to 5 year window stock. If you're looking for a return on your ChargePoint, you will not see it 2022. Okay, but again, ChargePoint got hit. As you know, many of the Nasdaq stocks did on Monday, including crypto. Okay, this may come back down too tomorrow. All right, now let's just go to the other portfolio and see what else is down as well. This portfolio was up slightly 1.46%, just about 0.5% more than the other portfolio. Today, again, the top stock was Tesla, up 3.41%. But again, you got to remember, yesterday they were down like 5%. Ford Motor Company was up today 3%. Again, they showed weakness on Monday too. SoFi Technology was up 5.31%. Again, they're holding strong. I like to see SoFi stay between $6 and $7. If they can hold at 590, that would be good. But again, I believe tomorrow, after Powell's comments, they will probably be hit as well. Also, we did see Microsoft today up 1.54%, and Microsoft is down drastically too, about 20% on the year as well, up from the high of $300 something. Now they're down at $246. All of these stocks are getting hit. Apple was trading at 160 earlier this year. Now they're trading at 133. Okay, so the stocks are doing a quick pump fake before tomorrow's opening. Okay, tomorrow the stocks may spur for a while, right? I've been seeing this kind of 1% move, and then the next day down 5%, 1% one day, and then down 5% the next. Okay, so that's all we're getting this year in 2022. It's not a really good short-term market, but in the long term, we'll probably see more good things happen. A lot of these tech stocks like Tesla, they're not going away. Also, Ford in the F1 electric F-150 is coming out soon too. This stock was up as much as $20 earlier this year. And like I said, I still think Ford can get it back. If we look here, back in January, February, it was trading at $20. All we need is some of this inflation to go away. When we get the inflation under control, they'll stop raising the interest rates, okay? So pretty much this was my update for the day. Again, Tesla top stock. And also be aware, tomorrow the Fed will speak. Fed Powell will speak tomorrow. And again, Fed will likely boost interest rates, which will affect most of the Nasdaq stocks. It will affect all stocks basically, okay? But just know 75 basis points will be higher than what he told us in May. In May, Fed Jerome Powell told us 50 basis points. And again, he's human too. He thought that probably inflation was going down too, but now he has to come back and raise interest rates a little further. Most of Wall Street is wanting a 75 basis points, and that should at least start to tamp down some of the inflation in the market. Okay, so again, if you'd like some free stock, please use my link below. I want to thank you for watching. Thank you for listening. Please like, share, and we'll see you on the next video.